Welcome, everybody. You can all hear me, you can all see me, right? We're all good? Great. So let me just see what we got. Okay. So let's start the journey. When we came in last year, it's really simple when you think about it. Let me start with this way. Everybody gonna know Back to the Future, right? The movie Back to the Future, Michael J. Fox, right? Everybody remember it? Okay. If we shot that movie today, we would go back to 1994. How many people here remember 1994? Right? How many people were investing in 1994? Right? Okay. How many bought their first house in the 90s? Right? Okay. How many young people do we have here? How many people were not alive in the 1990s? Okay, so you guys all get a free pass. Okay? So you're living this for the first time. This is like going back to high school, right? And we're going to take grade 10 Canadian history for the third time. And maybe you guys out here, the old ones like me, maybe we can get it right this time. Okay? As Mike said, it's not what we think, it's what the market's going to think. They're like, did you see Amazon today? If you would have invested 10 grand in Amazon and held it, it's worth 25 million US. Okay? This time it's not different. Don't screw this one up. Okay? I mean this. It's absolutely, we repeat these cycles over and over and over again. And we watch TV. We don't do our research. We don't get educated. We don't realize that they think we're the dumbest person at the poker table, right? They assume that we're going to go and listen to TV and that's where we're going to get our investment advice instead of coming to a conference like this or listening to investment professionals. You assume it's easy. It's really hard and it's all emotional. Okay? So look, if you take one thing away, is this is it. Well, you got to ask yourself a simple question. And you either go on one side or this side. It's a simple question. Do you think they are going to blow up the system? Yes or no? Okay? I don't want to, that's, you keep it inside your head, right? That's a question for you guys, right? I'm of the opinion that if they wanted the system to blow up, they would have allowed it to blow up in 1987, in 1997, in 2008, in 2020. They would have allowed it to happen. It would have happened already. Okay? That's just my opinion. That's my journey. My PhD's in behavioral finance, right? You have to have a narrative that you believe in, an ethos. It's going to be wrong. How many people here have gone canoe tripping before, right? We load up the canoe, we push off, we know we're going to be somewhere in 2 weeks, we push off, and we know something's going to happen. Same thing with travel, right? Some people love it. I hate it because it's always chaos. Okay? But my point to you is this. It's a simple point if you take one thing away from me today, is you are in front of a global reflation cycle, because if they don't cut rates and if they don't reflate, the system blows up. Stop. Write that down. Now you invest. Don't screw this one up. Okay, I said the same thing last year. Did you listen to me last year? Right? Everybody thought I was crazy. Buy the NASDAQ 100. Keep it simple. Right? Hey, how many people still have the majority of their assets inside of Canada? How many? Sell. Nobody outside of this country is going to invest until Justin is gone. Okay? You got it? The average Canadian has 52% of their portfolio in Canada. If we were sitting in the city of London right now, managing global money, how much would we put in Canada? 2% max. So You guys who are in Canada, the average Canadian investor is way long. And you know what happened? You want to hear, well, it's the Canadian banks. It's the dividends. Right? Right? Everybody in the world laughs at us because of our historic home buys. Okay? Here, let's talk facts. As of today, the NASDAQ 100 is up in Canadian dollars 6%. The TSX is down 50 basis points. In my world, you keep investing in Canada, you're not going to have a job. Right? The marginal money is going to leave this country. There is no reason to invest in this country. Do I make myself clear? I am a Canadian. I worked outside of the country for 25 years. I brought my kids back home. Why do I say it like this so bluntly? Because you guys don't listen to me. If I said it nicely, oh, that guy's nice. Guy's nice. Right? What's going to happen? Oh, the NASDAQ was 100, was up 50% last year. The TSX was up 8%, 9%. You left 42 points on the table. How much longer can you afford to do that? Okay? Now, I am not saying that there are not good companies in this country. Do you understand? But what I am talking about is the marginal money that institutional investors invest in, right? They invest through ETFs. We'll get to that. But there is no reason why. Back in the 90s, they forced you in your RRSPs to invest. You don't need to, right? You don't need to. I make a lot of people in Ottawa, in the mainstream media, uncomfortable, right? Because at Wellington, when I came back home and I worked for Wellington Altus, we are an independent. We are allowed to tell you the truth, okay? You can believe me or not believe me. You can take it or leave it. But at least when you come to us, we're going to tell you the straight goods as how the data reveals itself. Okay? So we're about to embark on the massive, massive technology wave that is bigger than the 1990s. One of the claims, one of the lines I steal from Mike is, every company is going to be a tech company. That's his line. Meta was up massive today, right? We're in front of AI, right? Blockchain. I'm going to talk a little bit about Bitcoin, right? That's where you are in the 1990s. And why am I so emphatic about doing it right now? Because do you know when all of these guys bought Nortel? Do you know when they bought Nortel? 1999. You guys think I'm crazy, right? You think I'm lying? You guys know I'm right. We lived it, right? So when you look at your portfolio and when you start making decisions, you've got to be true to yourself, right? Canada does not have an innovative industry like we did in the 1990s. We are in front of a major technological wave, okay? It's AI, it's ChatGPT. Have any of you guys, where's my one, downloaded ChatGPT? Even looked at it? Right? Productivity in the United States is 5%. Productivity in Canada is negative 2%. Where do you want to invest? Where do you want to invest? Where? Why? Why do we want to invest in Canada? Why? Tell me. Just give me the facts. And I'm trying to say, when you go back home and you start looking at your portfolios, the point is, why are you here? Is it because the Canadian banks are safe? That's it. Canadian banks, and we benefited from two things: our proximity to the United States and the urbanization of China. Mike just talked about the property, but the property situation in China. China's toast. The urbanization is over. The building bridges to nowhere is over. Hey, you know what it was in the 1990s? It was Japan. take out Japan, put in China. Okay? Hey, in the 1990s, take out the boomers, put in the millennials. Okay? Hey, it's the 1990s. Take out the computer, take out the internet, put in AI, blockchain, and Bitcoin. Are we woken up yet? We're good? Right? So, what do? How do you look at it? Right? So when I look at it, and you got to understand, I'm the youngest of four. I'm Gen Xer, okay? Grew up in Scarborough, right? Mike Myers monetized my childhood. My favorite band was Rush. And there was 3 bands when we were in high school. There was Rush, Triumph, and Max Webster. And actually the most popular band was Max Webster. And everybody know who Max Webster is, but Triumph, but the Rush, right? Okay, now you know my childhood, right? They're tearing down my parents' place and putting up a monster. Right, let's talk about housing and interest rates for a sec. Can I put my economist hat on? Right, I go on TV and I write in the Globe and Mail and I attack Tiff Macklin and I attack the central bankers, right? Everybody know what a price is? Right? Price. And you know what an interest rate is? Right? Interest rate is the price of credit. Okay, here's the nuanced thing. Take this home. Rising interest rates, increasing interest rates causes inflation. Okay? It causes inflation. They are doing absolutely the wrong thing. Okay? Tiff Macklin's got his PhD from University of Western Ontario. He knows it. And so when I say this across the country, they sit there and say, why does he do it? I sit there and I go, okay, let me ask you a question. Do interest rates solve the rental problem? Yes or no? No. In fact, raising interest rates causes the supply adjustment to slow down. It's worse. It exacerbates. Okay? All of this is called policy-induced inflation. Okay, we all dealing with that? We're cool? If we were in second year macro back in university, this would be a multiple choice question. And what you would do is you would take the policy-induced inflation and you'd put it over here. And I don't want to use this term because somebody sent me the email, and this is where it gets kind of freaky for me. Krista Friedland is now using my logic when she's talking to the media, and it gives me the willies, right? She said in Toronto, in CPI, so here's a real thing. I get to do this, right? And I'm trying to figure out at Wellington, what we're trying to do is we're trying to be provocative, but we don't want to go too far, right? So I do stupid stuff like actually read the report. Like today, the jobs report. Do you know that actually there were 31,000 job losses in the United States? When you read the StatsCan report about a year ago, in the second paragraph, it says, second paragraph, front page, it says 80% of CPI is caused, 30% of CPI is caused by mortgage interest costs, or the Bank of Canada, 30%. If you take that out, which you should, think about that. The Bank of Canada is raising rates and does not take into consideration that its rate hikes causes inflation. If this was common sense, we would be sitting around the table saying, let's take that out. Okay? If you control, this is the economic term, if you control for policy-induced inflation in Canada for 6 months, what is the inflation rate? Pick a number. How about -2%? How about deflation? How about we're going back to deflation? How about we're going back to the way it was before COVID, only it's going to be worse? I know you guys don't believe me. It's going to happen. And that's why they have, and by the way, they all know. They all know it. Right? Demographics, debt, digitization, and globalization. Those are the four main forces of deflation, and they've all been strengthened after COVID. What are you going to do? Think about that. Let me give you some other examples. So, why I say that to you is I would expect, first off, we don't have an independent monetary policy in Canada, right? Okay, fair. And in the United States, they use this number, not CPI, they use this fancy number called core PCE, or personal consumption expenditure. That right now, 6 months, is at 1.84%. There is a company in the United States called True Inflation that measures inflation real time. 1.34%. Ladies and gentlemen, this is what you've got to understand. You as investors live in the future. Do you get that? You are buying today for 12 to 14 months out. The majority of the economic data, if it is good, is a coincident indicator, and it gives you a picture of what's happening today. The central bankers live in the past, folks. They live in the past. They should have been cutting rates. Well, here's a fun fact. Japan, everybody know Japan, right? Japan was the only central bank that did not follow the Fed in this silly interest rate hike regime, okay? What just happened last month in Japan? Inflation went below 2%. Oh, you mean all of the rate hikes were a policy mistake? Yes. You don't raise rates to deal with supply shocks. Supply shocks go away on their own. There is a cottage industry of research in academia that talks about this. Okay? So the question you've got to ask yourself is when are they going to cut? And they're going to have to cut, and how late and how low does it go? Folks, if they don't start cutting real soon, interest rates are going back to the zero bound. Write that one down. So Mike next year can invite me back and say, Jimmy said, it's what my sisters and brother call me, right? And the trading desks, right? Right? That's where you're going. So you're living in the future. I just gave you a shot about the future. Build your portfolio accordingly. Okay? Don't look back. Look forward. And if you can't do this and you don't want to educate yourself, find somebody that will help you. Right? Because you believe what you hear in the majority of the media, the newspaper, you're the dumb money at the poker table. Investing is a zero-sum game. Meta was really high, exploded higher. Did you buy it when it was down? Right? You know, we've got some chartists that are going to, but it's that type of mentality you've got to get yourself used to. When I wrote the article in the Globe and Mail about the lack of independent monetary policy in Canada, I talked to the editorial board, said, I don't want the problem. When I phoned up my chairman of my company and said, I'm going on TV for an hour and we're talking about the Bank of Canada, and StatsCan has just given me a piece that's basically saying all the inflation is caused by the Bank of Canada. I have never seen anything like this in my career, right? How hard can I go? And folks, here's the difference. And this is what the world looks at us, right? And I don't mean, look, I say that I'm a Canadian, right? They think we're lazy, folks. They think we don't do our work, folks. They think we blindly give our money to banks, right? All I do is I come back here and I read the reports. I act as if when I was working in New York City, and everybody thinks I'm this savant. I'm not a savant. I read the report. I do basic research, right? I don't read the headline number. I don't base my research off the headline number. It's in the data. That's why I get paid for it. And I like it like that because if back to school, the dumber the class is, the higher my grade's going to be, right? So this is not a complaint. I do this because Mike asked me to come. Okay? So so what do you think China's going to do? They're done. They had no debt after the global financial crisis. Now they got 55 trillion. The real estate market's blowing up. They don't have a free floating currency, and their capital markets are closed. What are they going to do? China was 30% of global growth, building bridges to nowhere. You know what they're doing? They're manufacturing cars. They're manufacturing over capacity. Do you know what happens when there's too much stuff? It's called deflation, right? They're following the Japan playbook to the T. Do you know how many times in my career Japan has thought that they had solved the deflation problem because they had a couple of years of inflation, right? The best thing that can happen, I'm going to talk a little bit about real estate up here, right? So first off, listen, I lived in Washington, D.C. during the global financial crisis. I lived in the most affluent, the fourth most affluent county in the United States, right? It's amazing. True story. At a lacrosse game for my kids, I've got two girls, and it was very interesting. So I know the inside pool. What do I miss about DC is I got all my stuff from the cocktail parties, the lacrosse games, right, to find out what was going on. I found out about the fourth turning. Mike was talking a little bit about it. It's called the book called The Fourth Turning about Strauss and Howe. About every 80 years we go through this structural move, right? From a parent on my kids' lacrosse team, he was a Democratic strategist, and he handed me this book and said, Bill likes this book. You should read this book. Bill's handing this book out. That was Bill Clinton, right? It was weird living down there. And I want to say something to you about the United States that you've got to understand. When I sit there, if I lived in Toronto, we went to the Island Airport, and we took a border flight to Dulles, and we rented a car, and we went to my neighborhood, they all think I'm Democrat. And all I would say is, I want health care and I want education. That's all I would say. And I was a Democrat. I want you to think about how the different polar world of politics is down, right? I go on, Mike, I think Trump's going to win, right? We're going to have to deal with it, right? We're going, as you pointed out correctly, we're moving back, right? We're moving back to the center, right? And so what I got and what I want you to think about is this, and I talk about it. I got called into a room in 2012. This is what I did in the States. This is how I survived, right? I would have rich people want me to be in the room because I would sit there, look at them as a CEO or a very powerful, very famous individual, and I would look them in the eye and I say, this is my opinion, right? You don't have to accept it, but this is my opinion. Okay? Look, everything that Mike asked you when you put your hand up speaks to one thing. And this is coming your way. And you need to do work on it. Because I talked about this 4 years ago. And my buddy Graham just came over and handed it to me. I talked about Bitcoin 4 years ago. Okay? If you like gold, because of everything that Mike said about the government, about the lack of control, about them printing money. Okay? There's more debt now. There's as much debt as there was after World War II. Why does the credit market not believe the GDP numbers or the labor numbers? Because the smart money in the market knows it's all government spending, folks. It's not real, folks. And eventually there's going to be a payback, folks. Right? And you know what they're going to do? They're going to print cash. They're going to cut rates down. And if you don't like the central banks and you want to have control of the money, then why the heck don't you guys own Bitcoin right now? Have you looked at it? Have you educated yourself on it? And the only reason I'm saying this is there's no way Mike could give me an hour right now to talk about Bitcoin and you wouldn't understand it. As I said to somebody today, do you understand the email? Do you understand the internet? Do you? Because then why? Why do you try to figure it out? This is what we do, right? And you know when you sit there going, I'm going to figure it out, I got to get into the in depth of it. Do you know what happens? You don't buy it. You don't buy it. So there's 4 cycles that are coming together right now. There is the political cycle. It's a 4-year cycle. You understand? Political cycle. The next 2 years, between now and to the end of 25, you've got the wind at your back as an investor. And then there's another cycle that no one's talking about, but they're starting to pick up on. It's called the 4-year credit cycle. Since 2008, do you know what they have to do every 4 years? They have to cut rates and they have to increase the size of the balance sheet. You know why? Because they got to refinance the government debt because the governments can't do it. Do you really think that the Fed, that the Bank of Canada, let me put it this way, do you think that Justin and Sleepy Joe can finance their debt at 5% overnight rates? So just go back every 4 years. And then there's another one. It's called the Bitcoin halving cycle. Every 4 years, less supply comes in to the market. Here's what I don't know. This is how I talk to the teams at Wellington, right? I don't know where the price is going to go, but here's what I do know. Larry Fink of BlackRock has abandoned ESG and he's embraced what? Hello? Wall Street's about to embrace this. Every institutional investor is going to put 2 to 3% in their portfolio. It's an uncorrelated asset. There's 19 million that are out right now. Only about 10% of that is freely floating. And if the price of this thing goes to, let's say 100,000, there's no supply. There's no supply response. Think about that. Think about if I sit there and I love gold, right? I have been interviewed. I think gold's great. So this isn't an argument. They're cousins. Do you understand? There's not an either or. You understand, right? But if you don't do your work now, and we have been talking about this for 4 years, when it's $300,000, think about back in the 1990s when
you caught me when I was just taking the dog out. Are you?
Am I blunt enough?
Are you okay with it? With a little joke? Are you pretty okay? So I go to this thing. I go to this thing in Vancouver that's called the World Financial. So they talk about interest rates. So anyway, this guy comes on. He's a big realtor in Vancouver. So he talks about dates, double income, no kids. Okay. He's going through all this stuff in Vancouver. And I was down there. There it is a lot of lift off. So we've got this one here. So he says there's double income, no kids. Because in Vancouver we have double income, little dog owners.
And what did Ray down?
Anyway, you were talking about Sloan. Okay.
Value. Going back to these eras where you have reflation in it, or they cut to stand the balance, right? Because they have to, or the system blows sky high, right?
Okay.
What's the number one performing asset class? I'll tell you, Bitcoin. What's the number two
All right.
performing asset class? The NASDAQ 100. The
Mhm.
number three, the S&P 500. The last one
Yep.
in equity. You know what the worst is?
Yep.
North America, the TSX. Do your homework. You don't believe me? Get the
Okay.
data.
Okay. Okay.
Okay? My
Already understood. We'll relay.
phenomena. And here's my point. It's not, Bitcoin's not for
Yeah, give it a
everybody.
week. Just give it a bit of a
Do
thing.
your work now when it's 43 before the halving cycle,
Okay.
which happens in
Okay, already. Thanks, Crystal.
option by Wall Street.
Bye.
Every institutional investor in the Western world is going to invest in it. And there's only 1 million of it free floating. All right. And oh, by the way, Hong Kong is going to what? Offer it to their citizens in China. I don't know. Demand goes up, supply fixed. What does price do? Right? Don't overthink it. And if you can't do it here and you don't want to do it, that's okay. But when it gets really high, please don't buy it. Please don't buy. No, I'm trying to be honest. Don't buy it. It's not for you. Okay? But if we are right about what's going to happen, we're going to start getting calls in the middle of 25. Say, you know what, Jim? I understand risk now. I understand risk. Like, so get me out of the bonds and buy me the most riskiest stuff you got, right? It's a cycle, right? It's going to go down. It has the highest Sharpe. It increases the Sharpe ratio of every portfolio. That's the risk-adjusted return. That's why institutions are going to pay it. It's highly volatile. But guess what? It goes down, it goes up more, right? So my things to you guys is do your work, okay? Inflation is going away. We're already seeing deflation. Rate cuts are coming, okay? Don't lock in your mortgage now, okay? It's going to come down. How low? I know the direction. Probably is going to continue to go down until late 25. That's as far as I can. Let's get that far. Okay? The data says buy innovation and secular growth. History says real estate trades sideways at best for a decade to grow out of it. We've got commercial real estate stuff blowing up all over the place. If they don't cut, think about all of the assets on the balance sheet of banks. Bank of Canada just lost $6 billion because of this. Okay? They have to cut. Okay? Do your work. If it seems too good to be true, it is. This is a really hard business. You're doing a great job by coming here and getting educated. Be around for the next couple of days to answer any questions. Okay? Let's have a good couple of days, okay?